Hi guys, let's talk about discipline. You're not going to get very far as a trader if you don't have some level of discipline. So this is a topic which a lot of traders really struggle with, especially new traders. The stock market is driven by fear and greed primarily, and it can be really hard to keep control of your emotions and not let them control you when it comes to exiting positions, waiting patiently to get into positions, cutting losses when you know you should, being greedy, letting your profits run way into overbought or oversold levels where you know the price is not sustainable, not taking your profit off the table. So these are all the types of things that can go wrong for new traders because of a lack of discipline sometimes. So I just want to share with you my perspective on this. I think I naturally am quite a disciplined person, and I don't really have an issue with discipline as much as some other traders. But I think it's because of the way I look at things logically. So let's just have a look at some of the charts. And if I explain to you the way that I think about it, perhaps it will help you have some discipline, some more discipline in your own trading. So you have to really think about what you're trying to do here. So a lot of people either fall into the investor bucket. They're an investor, they just dump their money into the market and they're waiting for the price to go up or down depending on whether they bought or sold. Or they're a trader where the idea is to get in and out several times and make even more money than if you're sitting there as an investor in a position. So with that in mind, if your goal is to be a trader, it does not make any sense for you to expect to be able to get into positions continuously all day, every day, sometimes several positions. Why would that not make sense? It does not make any logical sense if you think about it carefully. I'm going to explain why. So the idea of being a trader is that you are trading these highs and lows. So it stands to reason that there must be some times where you have to wait. Otherwise, you may as well just sit in the market. You're basically sitting in the market. It's almost like it's worse than sitting in the market, because at least as an investor, you would get some profit over some time. It's going to ebb and flow up and down, and then you're going to go into profit. But as a trader, what possibly you're doing, when you're getting into the market too many times, is you're cutting losses. You're taking losses where you shouldn't really be. You shouldn't have entered the market at all. This is the biggest problem that I've seen new traders are dealing with. Waiting, sitting on their hands and being able to just wait to place a trade. They have a real problem with it. I've seen it. So, as I was saying, it does not make any logical sense for any trader to be constantly placing trades. Because the idea of being a trader is that you are getting in when the market's going up. If you're a trader that buys the market, I'm not talking about selling right now. I don't short the markets, but the same is true the other way around. If you're a seller, there are going to be times where you have to wait too. I'm just going to talk about buying to make this easier. So the market, you want to get into the market when it's pushing up, because if it's pushing down, it's going in the wrong direction for you. So you can see the markets don't just go up in a straight line. They're jagged, and the market is breathing sometimes. It's reacting to news and things like that. So it just makes no logical sense for any trader to expect to be able to log into their trading app and start placing trades immediately. So this might help you if you think about it in a really logical way. There must be times where you have to wait. It's a mathematical certainty that if you are going to be successful as a trader, you have to wait sometimes. Mathematically, it doesn't make sense if you're not waiting, because there are times on this chart, as you can see, that the price is going down when you want to get in and it's going up. So you know, half the time the price is going down, or it's probably less than half the time. Mathematically, it has to be less than half the time in this particular market. Why? Because the price is going up. If the price is in an uptrend, it's going up. The jagged spikes of it going up are for longer periods or more frequently than when it's going down. Otherwise, it would be in a downtrend. I think I look at things in a very mathematical black and white sense, and I think it just helps me to contextualize what I'm doing and what would not make sense in my trading. So, you know, if you just think about that logically, you have to accept that when it's going up in an uptrend, there are going to be times where it's pulling back, and when you wake up in the morning, we might be on one of those days. Could be on one of these ones, could be on one of these, could be, you know, I use multiple time frame analysis, so it could be going up here, but we've got a massive red candle here, so within that smaller time frame, you know, the market is pulling back and I'm waiting. And it's quite a simple concept, but there's another trader that I follow, and he's taught me a lot of things. Ricky Gutierrez. I've learned a lot about trading just from watching his videos on YouTube. And one of the things he says always sticks in my head. It's the simple things that people struggle with, and this is one of those simple things that they just struggle with. The question is, can you wait? Are you physically able to wait and sit on your hands? If you are not physically able to exercise that discipline and wait sometimes, and look at this chart with me right now and accept that there are times you must wait, otherwise it's illogical, and the idea of trading does not make any logical sense whatsoever. You can't be a trader and not wait sometimes, otherwise you're just an investor. You're worse than an investor because you're taking losses. So if you are physically unable to wait sometimes, my advice to you is to become an investor. Dump your money into an account. Now you're sitting in the market the whole time. Every day that you open your account, you are sitting in a trade, in an investment. So, but the point is, you know, chances are you've clicked on this video because you want to be a stock market trader and you're having problems with discipline. So I would just encourage you to think about it in this logical way. It does not make any logical sense for you to be able to open your chart and keep jumping into trades immediately. Because some days you are going to open your chart when it's like this. When we're here, it's in the middle of a downtrend. Or we're here, it's on this one. Or, you know, we're here. Today is this day. Some of those days are going to be the red days. So, as I say, I don't short the markets, but this applies the other way around as well. You might be saying to yourself, well, I short the markets when it's going up. The same thing happens exactly the other way. Well, let's look at some markets that are going down. It doesn't matter that you short the markets. The same concept still applies. If you want to be a trader, there are times you're going to have to wait. Let's look at lumber. Lumber's going down a lot of the time. You know, if the market's generally going down, you could be on one of these little pullbacks. When you wake up in the morning, it might be like this. So it just really, this is where your analysis comes into it. You need to just look at the charts and be honest with yourself about what you can see with your own eyes. Just keep it simple. What is on the chart? Right, if it's not in the place that I need it to be, I'm just waiting. And I'm focusing on this type of discipline, placing trades and not placing trades, because as far as I can see, this is the biggest thing that people struggle with. It's something that I admit I struggled with when I first became a trader. I think it was the excitement of thinking, wow, I'm going to be driving a Ferrari in a couple of months. You know, a lot of traders have that idea in their heads and they want to get started and they don't want to wait. And it can be a bit of a black hole as well, because you don't know how many trades other people are placing, and you don't know what normal trading looks like. Trading is different for everyone. I've had different trading styles. There have been months where I only place 3 or 4 trades, and I was really successful doing that. Now I place more of them. I'm managing my risk in a different way to how I used to. So trading does look different for different people, and I think it's hard for new traders when they're in a black hole and they can't see what's going on to trust themselves and decide, I've decided it's time to wait today, so I'm going to wait. The other thing to mention is, you know, you can get FOMO when you can see the market's going up. If you've decided that you're going to wait and then you can see the market, it looks like it's pushing up, this can be quite frustrating, especially for a new trader. But it's another acceptance point. You have to accept, because we don't have crystal balls, when you make your decision that today you're going to wait, in terms of mathematical probabilities, like statistically, you are going to find that on some of those occasions the market does keep pushing up, and you were slightly wrong. It might have pushed up for another few days, then it starts tumbling down. So it's another acceptance thing. Accept that sometimes you are not going to be, you know, a perfect stock market trader. You're going to predict where you think the price is going to go to, and sometimes you're going to have to wait. And occasionally you might be slightly wrong. It might be that you're waiting today and actually still pushing up today. You thought it was going to be pulling back today, and now it's pushing up a bit further. So, you know, this, I can give you an example. Google right now. I'd like to get into a trade on Google, but I'm skeptical because the RSI is high, really high. It's got lots of room to come up for me. It's a good one to trade, I think, but I'm skeptical because the RSI has gone so high. So I'm waiting. But when I'm watching this, I'm thinking, it's making more profit right now and I'm not in it. So this is something that I accept as a trader. I am going to miss out on some profit sometimes. And you can try and think of it as a game. You're just playing a game like Xbox, or, you know, whatever you play on your Xbox or your PlayStation. You're playing a game of riding it up and skipping it when it's going down. You're swerving it when it's coming down. That's the name of the game of a trader. Otherwise you're just an investor. So it's just, try and look at it as you're going to get really good at playing this game. It is a game. You get better at playing a game the more that you do it. You'll be able to look at the chart and know and have confidence in yourself. And as you make those decisions and you see that they were right most of the time, then you'll have more confidence in yourself. So I hope you found this video helpful. You must have clicked on it for a reason. You must be struggling with your discipline. So I really hope that you can just look at it in a mathematical, logical sensical sort of way. If the market is not going up in a straight line like this, in a proportional way, where it's going up and it's pulling back, you have to wait sometimes. It does not make any mathematical sense for you not to have to wait. I'm just going to leave that with you. If you think this video is going to help you with your trading and the way you approach things, it would really help my channel to grow if you could give me a thumbs up or subscribe to the channel, or share my videos. That would be really helpful. Really appreciate all the support that I've had already from you guys. So thanks a lot, guys. Bye.